Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday ETF report. And this week we're doing something a little bit different. We're going over the ETF top stocks, which we go over every week, but now we're adding some enhanced income, which brings in about 6% per month over the past 5 months. And we're going to take a look at that portfolio. This is December 21st, 2024, folks. We're right in the middle of the holidays here. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So let's look at our sector stars. Now, our sector stars are stocks that are picked from ETFs which have outperformed the S&P 500 over the past 5 years. So we figure the whole theory was that if we take the top stocks from the top ETFs, we should be able to outperform the S&P 500 without even thinking about it, folks. Of course, finding those stocks is a whole nother series, and that's why you subscribe to our newsletter, so we give you those stocks. All right, now let's look at what happened this past week. Well, it was crazy because the market was just plodding along, giving sell reports or sell signals all over the place. We had a big sell signal on the Dow over 2.5 weeks ago. We had a sell signal recently, earlier in the week, on the S&P 500, and then we just got a sell signal on the ETFs, or I should say on the QQQs, which is the Nasdaq 100 stocks, and the Nasdaq itself. And so we said, okay, this market's going down. And then on Friday, it just started coming back. And I'm recording this toward the end of the day on Friday. So this is midday, so these prices are not closing prices yet. And what we did is the QQQs are up 27. QQQs, again, the Nasdaq 100, up 27% this year. The S&P is up 25% this year. Now, the top stocks, we have about 17 or 18 stocks in this portfolio right now, and we picked the top stocks from about 3 or 4 different ETFs here, and we're up 38.6%. Now, last week, don't forget, we're still down from where we started at the beginning of the week, so we're still having a down week here, and we lost 1% or 1.1% from last week, and the QQQs were down 1% because last week they were 28.9. Now they're 27.3, so they're down close to 2%, and the S&P 500 down about exactly 2%. So our top stocks up 38.6%. Last week they were up 39.7%, so we lost 1% in there. So the point that I'm trying to make is that even though these may be more volatile or this may be a more volatile portfolio than the S&P itself, when it goes up, it really, really goes up. And we can see that even this past week, which was very, very volatile, we were not as volatile as the S&P 500. But most of the time, there's a little bit more volatility in there because those stocks have gone up, and then when they come down hard, and then when they go up even harder. Now let's look at the QQQs, the top stocks in the QQQs. Again, the QQQs represent the Nasdaq 100 stocks, and they are up 49% year to date. So folks, we did break into the 50% area, about 51% in the beginning of the week, and then we fell down. But last week they closed at up 48%, 48.5% for the week, and we actually climbed 0.5%, while the S&P is down 2% for this week. This should be the 20th of December up here. Just didn't put the right date in there. Now, let's look at a real portfolio, and it started in about the middle of July with 110,000, and then it added another 15,000 during the past several months. But it also withdrew over $7,000. So our average base way or average base portfolio, $117,000. Now, what is the value as of just a few minutes ago before I started this video? Almost $153,000. So where did all that money come from? Well, 34,000 of it came from the stocks, $34,945 is the total profit in about 5 months. And from the stocks that you just saw, that you just looked at, we got 21,000. But from various other enhanced income methods, we received almost $14,000. So in other words, 60 of the $34,000 of profit, or almost $35,000 of profit, which comes to about 60% of that is from the stocks that you just saw, and 39.9, let's call it 40%, comes from enhanced income. Now, what is that enhanced income? Well, folks, it's really pretty simple, except you just have to be in front of your computer or listening to us. And the question that all this is coming from is, why don't I run a mutual fund or an ETF of some sort by using these type of strategies? And the answer is because you can't do it with an awful lot of money, and you can't do it with more than one account. So either you have to pool money, and then of course the cost of running a mutual fund or an ETF, number one, starting it is huge. I mean, we're talking about tens of thousands of dollars, and to get the proper accounting and the lawyers and all the other things that go along with it during the year, you're looking at other tens of thousands of dollars. So it really doesn't pay unless you get very, very big. When you get very, very big, you just can't do these option strategies that we're going to look at right now. Now, do we look every day for different option strategies? No, they come along. And since we're here looking at our stocks and trying to pick the best stocks for our portfolio, and we're doing some research every day, we're here in front of the computer. So when you see something like this, now what is this? These are the QQQs, the Nasdaq 100, just the past couple of weeks in here. And we already had, here's a sell signal, when these tops here were lower tops than over here, but meanwhile the index itself was going up. So the index was going up. The signal up here was going down. So in other words, higher highs on the index, but lower highs on this particular indicator, which is the relative strength indicator. Now, we already had sell signals on the Dow as of 2.5 weeks ago. We got a sell signal on the S&P 500 at the beginning of this week. And so the strongest ETF out there was the QQQs, the Nasdaq 100 and the Nasdaq stocks. So we were ready for this decline in here to happen at any time. And then when the market went down on this particular day, this gave us a lower high up here. And we said, okay, what are we going to do? And then the market opened on the following day, and it started going down, and we bought some options on the QQQs. And you're saying, well, if you bought a call option on the QQQs and it went down, aren't you going to lose money? Well, here's something that you should know about. This is the SQQQs. Look up here. That means you're short the QQQs on a 3-for-1 basis. So it's an inverse ETF, 3-to-1. So that as the market moves, this will move 3 times as fast. So this is exactly the opposite of the QQQs. Now, here's the QQQs going up. But the SQQs, which means you're short the QQQs, but you're buying it, you could buy calls on this. And since we were right about in the middle here, and we bought, and then the next morning we got out because that was a short-term trade. And boy, we made a lot of money, and we were very scared, I have to tell you. So what's it doing right now as I'm recording this? It's going down because why? the QQQs are going up. So let's go back to the SQQQs. What I'm bringing up here is that there was a chance to make some money on a short-term trade, and we took that. But what about other stocks? Let's go to Avago. And Avago is actually Broadcom, and it used to be called Avago, and the stock symbol is still AVGO up here. So Broadcom we still call Avago, at least us old-timers do. And here was the stock was just playing around, wasn't going anyplace for quite a while. And folks, this is one of the stocks in three of our portfolios, and it's been very, very good to us over the years. And then all of a sudden, this stock took off like a rocket, and we said, okay, we know what happens when a stock takes off like this. Big gap up, and you always wait a day when this happens. You always wait a day. And yep, the second day, another big rise in this stock, and that's when you sell a covered call. So you sell a covered call on this particular stock up here someplace, and there's so many different calls you could sell. You could go out a week, you could go out a month. And if you go out a month, you're going to get more of a premium, but you're going to go higher in case the stock does move up. But what happens if you don't have 100 shares? And let's go to this particular portfolio. And we have Avago in there, but we only have 66 shares of that. So if you sell a covered call, you need 100 shares of that particular stock. So we're right in here right now. And what you can do is you go out and you buy a deep in the money call on Avago, or an at-the-money call, depending on what you want to do. So you're going to buy an option contract deep in the money, so it gives you over actually 100 shares. So you buy a particular in-the-money call, and that's for 100 shares, and then you sell one of the calls. Let's go back. You sell one of the calls up in here, very short term. So that gives you enough money to buy that. Now, had we not known about this move up, and in fact we didn't see it the first day, we got a phone call and said, hey, have you seen Avago today? And that was after the market closed, and I said, whoa, there it is. And of course one of our alerts were hit. So one of the people working here said, hey, we have an alert on Avago, the thing just shot up. And then we waited the one day, and it closed at the top. And then the following day, it started dropping a little bit, and we said it's time to sell our covered call. Because usually when a stock does this, it just kind of plays around. Look back here. We had almost the same type of thing. It went up 3 days, and then all of a sudden it started to fall. So usually when a stock does that, just about all the time, it doesn't keep going up, folks. This is a high-priced stock. It's a big company, so it just doesn't keep going up. And you sell a call in there. So it's things like that that you can do in order to get enhanced income. And sometimes you just wait. And let's go back to one of the stocks here. You've got your stocks in your portfolio. Here's Fortinet here, and they're in cybersecurity. And you have Lam Research, which probably won't be in our portfolio this coming year or for 2025, 100 shares in NVIDIA. So you can sell calls when it reaches a particular high. You can sell a call on it. And if the call goes into the money or the stock goes into the money of that call, you just buy the call back and you move on to your next stock. But you wait for your positions, because that is not your sole income. Your sole income is from the stocks in the portfolio. You just want to add to it. Now let's look at this portfolio one more time. Again, we started with 110,000. We added 5,000, added 10,000, and meanwhile, you got to go to lunch every now and then, folks. Okay, those are expensive lunches, but we have to buy Christmas presents and things like that, and you take some money out. But here is the money that we made on those stocks that I was showing you, and they're not all going to be the same for 2025. We're changing some of them actually over this weekend, and you want to also make a little bit money from doing some option contracts in here, and they're conservative option contracts, and you wait for your particular signal. You don't have to force it. In other words, you're not making the sole amount of your money from having to do option calls or option strategies and be in front of your computer all the time. You're keeping an eye on the stocks in your portfolio and see if they do anything outrageous, and if they do, you want to be able to take advantage of it a little bit. So what have we done over the past 5 months? 29.7%, call it 30%. That's almost 6% a month that we're getting off of doing strategies like this. Now, how often do you do strategies like this? Well, I've been doing them for about 40 years, so I know a little bit about them. And really, that's how I make not all my money, because most of my money comes from the stocks, long-term stocks that have been in my portfolio. And when a stock is not a good stock anymore, or it's replaced by another one, you go ahead and do it. You don't fall in love with the stock. And there was a time when we didn't have Microsoft in our portfolio for about 5 straight years. And then when it broke out of its trading range that it was in for 5 whole years, we got back into the stock again. So you don't fall in love with the stock. You get the good stocks, and that's what we do. We invest for the long term. And then around that, we'll do some option contracts just to add a few dollars for those lunch dates that you want to take your wife on, or your husband, or your significant other. And that can add a few percent per month to the portfolio. But don't forget, you go back to a portfolio like this, the best stocks in the Nasdaq 100, and folks, you don't have to do anything. You don't even have to watch it during the year. And this year we're up 49%. By the way, this portfolio was up 94% last year, 94%, and you didn't have to do anything except our newsletter says in the beginning of the year, or at the end of the prior year, which stocks we're going to buy for that entire year. And there it is. Like I said, we did 94% last year, but we were coming off a down year in 2022. So usually when you come off a down year, you double and triple the S&P 500. So folks, we've had a crazy week this past week with the market starting to go down, getting sell signals on the Dow, getting sell signals on the S&P. And today, as I'm recording this, it looks like this market wants to turn around, and it's doing very, very nice going into next week. We had numbers come out today that said inflation was not going up; it was actually going down on one of the on the PCE index, and so therefore the market said, "Hey, we like this." And don't forget, the Fed said they will be lowering interest rates next year, just not as many times as they originally thought, and that's why the market fell on Wednesday. It fell like crazy, and then all of a sudden, and then it fell on Thursday, and then today, Friday, it's moving up very, very nicely, very, very strong. So, folks, you go out, you buy the best stocks, and you can go to the beach. You can forget about your stocks. You can forget about your portfolio. You don't want to do too much short-term trading, or you're tied to your computer, and then you wind up, if you're forcing yourself, you wind up making mistakes. So go out. It's the weekend before Christmas. You take it easy. Enjoy your holiday. And folks, we will see you back here in a couple of days. It'll be a week that a lot of our staff is off, part of the week or most of the week, but we'll see you back here on Tuesday. So meanwhile, go out, be with your family, enjoy yourself, stay safe. We'll see you in a couple of days.